The 50-30-20 rule. Unlock your financial freedom today. Managing your money can be a daunting task, especially when you have to keep track of your expenses. But what if there was a simple rule that could help you manage your finances and grow your savings? In this video, we will be discussing the 50-30-20 rule, which is a popular budgeting tool used by many people to manage their expenses, save money, and control their finances. This rule is designed to help you divide your income into three categories, namely, needs, wants, and savings or debt. Welcome to Joseph Leopard Finance, the channel where you can learn all about personal finance, investing, and wealth building. Do you want to learn how to make your money work for you? Then you're in the right place. I've spent years studying finance and I'm here to share everything I've learned with you. So, if you are new to the channel, please click the subscribe button for more videos like these and ring the notification bell so you won't miss one. Let's get right into the video. Step 1. Limit your needs. The first step in using the 50-30-20 rule is to limit your needs. Needs are the expenses that you cannot live without, such as housing, health, transportation, utilities, food, and the minimum clothing and living supplies. This category should not exceed 50% of your monthly income. If you find that you are spending more than 50% of your income on your monthly needs, then it's time to carefully evaluate your expenses and identify areas where you can reduce your spending. Tracking your expenses is a good way to identify where your money is going and adjust your needs category accordingly. For housing, it's important to find a place that's affordable and meets your basic needs. If you're renting, consider finding a roommate to split the cost. If you own a home, make sure you're not spending more than you can afford on mortgage payments, property taxes, and home insurance. When it comes to utilities, look for ways to cut back your bills. This could mean turning off lights when you leave a room, using energy-efficient appliances, or adjusting your thermostat to save heating and cooling costs. Food is other essential expense, but there are ways to save money here too. Try meal planning and cooking at home instead of eating out. Shop for grocery in bulk or look for deals and coupons to save money on your grocery bill. After you've covered the essentials, you can start looking at other needs like transportation and healthcare. If you need a car, consider buying a used one instead of a new one to save money. If you use public transportation, look for discounted passes or other ways to save on fares. And when it comes to healthcare, make sure you have adequate insurance coverage to avoid unexpected medical bills. Remember, the key to limiting your needs is to only spend money on things that are truly essential. Be honest with yourself about what you can and can't live without, and make adjustments as needed to stay within the 50% limit. With some careful planning and budgeting, you can easily meet your needs while still having room to save and spend on your wants. Step 2. Define wants. The second step is to define your wants. Wants are the expenses that you can opt out of, but your life would be harder without them. This category should account for 30% of your income. Example of wants include internet plans, data plans, home cable bills, mechanical repairs for your car, and other expenses that are not essential to your survival. It's essential to distinguish between needs and wants, as this will help you identify areas that you can reduce your spending and save more money. Prioritize. Once you've made a list of your wants, prioritize them based on their importance to you. This can help you identify which one you should focus on achieving first, and which ones you may need to put on hold for the time being. Be realistic. It's important to be realistic about your wants, especially when it comes to the resources. Example, time, money, effort that's required to achieve them. Consider whether your wants are realistic given your current circumstances, and whether you are willing and able to put in the necessary efforts to achieve them. Evaluate your wants regularly. Our wants can change over time, so it's important to regularly evaluate your wants and make adjustments as necessary. Consider whether your wants are still relevant to your life goals, and whether they are still worth pursuing. Consider the impact on others. It's important to consider the impact of achieving your wants may have on others. Will achieving your wants come at the expense of someone else's needs or wants? If so, you may need to reevaluate your priorities and adjust your wants accordingly. By following these additional points, you can define your wants in a more thoughtful and intentional way, which can help you make better decisions in how you allocate your resources to achieve them. But before we move on, Please comment below if you can relate to the video, and if you find this video helpful and interesting. Please consider liking the video and share it to your loved ones and friends. Back to the video. Step 3. Save up. The final step is to save up. The last 20% of your income should go towards your savings and paying off any debt that you may have. This money can be used as an emergency fund, a deposit for a home, for investing, or saving money for retirement. It's important to note that only debts that are above the minimum required payments should go into this category. This includes additional credit card payments or extra payments on your mortgage to clear your debts faster. The minimum payment on your debt should be included in the needs category. Once you have a clear understanding of your needs and wants, it's time to start saving up. The first step in saving up is to create a budget. A budget is a financial plan that outlines your income and expenses. It helps you identify how much money you have coming in and how much you are spending. To create a budget, start by listing all of your sources of income. This includes your salary, any bonuses or commissions, and any other sources of income you may have. Next, list all your expenses, including your fixed expenses such as rent or mortgage payments, utilities, and car payments, as well as your variable expenses such as groceries, dining out, and entertainment. Once you have a clear picture of your income and expenses, look for areas where you can cut back. For example, you could reduce your grocery bill by buying generic brands, or you could cancel a subscription you don't use. Any money you can save can be put towards your savings goal. Another way to save up is to set up automatic savings. This is where a portion of your paycheck is automatically deposited into a savings account each month. This helps to ensure that you are consistently saving, even if you forget to do it manually. It's also important to set a savings goal. This could be a specific dollar amount or a percentage of your income. Once you have a goal in mind, you can work towards it by making small changes to your spending habits and consistently saving. In conclusion, the 50-30-20 rule is a simple yet effective way to manage your finances and achieve financial stability. By limiting your needs, defining your wants, and saving up, you can ensure that you are living within your means while still enjoying the things that make you happy. By allocating your income into 3 categories of necessities, wants, and savings, you can create a balanced budget that helps you achieve your financial goals. Whether you're looking to pay up debt, save for a big purchase, or simply improve your financial situation, the 50-30-20 rule provides a clear framework for achieving your objectives. By following these steps and staying disciplined in your spending habits, you can take control of your money and live the life you want. Thank you for watching Joseph Leopard Finance, your go-to channel for all things personal finance, investing, and wealth building. I hope you found value in today's video and that it inspires you to take action towards your financial goals. If you enjoyed this video, be sure to give it a thumbs up and subscribe to our channel for more content like these. And don't forget to hit the notification bell so you never miss a new upload. Join our community by leaving a comment below and let us know what financial topics you'd like us to cover next. Remember, financial freedom is possible for anyone, and we're here to help you make it happen. Thanks for watching, and we'll see you in the next video.